Good morning. Once again, we meet. Today is 23 September. Nour, we have a lot of updates on the market as usual, a lot of opportunities. We've noticed that the dollar index is still maintaining almost the same levels. We've done like a very small, very tiny correction from 100 or 105 till,
True.
sorry, 100.5 till 100.8. So, which is like almost nothing. But
Yeah.
the effect on the FX market is huge. Like we're seeing euro dollar opening on a gap, sterling dollar, dollar yen, dollar CAD, New Zealand, like all of the majors, they opened on a gap. And there are talks of the geopolitical tension that is affecting the market currently, which makes me a little bit surprised, to be honest. The war has been going on for more than 11 months. And when the press decides to talk about it a little bit, you see that the market moves a lot and gold started jumping up. And we've been living and surviving these levels since ever. Like nothing has changed from the Fed level.
Yeah.
We've seen the market before. This move should have happened, let's say, last week if it was because of the Fed. So why it happened this week?
Here's the thing. I mean, remember what we talked about, that people should not basically, overestimate what the Federal Reserve is going to do and the impact on the market. First of all, markets were already priced in more than 100 basis point rate cut from September until the end of the year. Now, after the Federal Reserve decision and after we looked at the dot plot and the economic projections, markets are pricing in 125 basis point rate cut from now until the end, from September until the end of the year. Now, we started with 50 basis point. There's 75 basis point left, which means either they will have to cut 50 in November and then 25 in December, or the other way around, which is 25 in November and then 50 in December. This is going to be based on what the next few weeks of data will give us. That is from one side. At the same time, from a technical point of view, the dollar index is still holding that 100.60 that we did not break multiple times, and which is from a technical point of view, this would basically might lead to another upside retracement. Does this change the general outlook of weaker dollar for the time being? No. But on the other side,
why the gap happened now? That's the question. Like, what was the reason that this week we opened on a gap?
I mean, I think the tensions in the Middle East is basically the one that has led to this one. That's from one side, because now it's a clear basically that escalation is the only way that we're seeing. We're not seeing any kind of de-escalation. Negotiations has collapsed. So that's from one side. This basically could expand to a regional war, and the risk of the regional war is basically the highest than ever before. That's from one side. Another side, the announcement that we saw from China that they will basically have some sort of an announcement later this week about the government basically stepping in again with another round of stimulus. This basically creates some sort of like another reason for the market to be fearful of what's happening in China and how bad things are. So this is basically another reason. But I think regardless of what's happening, this is still considered another short-term retracement when it comes to the dollar. When it comes to gold, of course, this is another reason why gold is basically going up is because of the regional war, and the risk of regional war is basically higher than ever. We could well see another push, but I would still warn people, normal and retail traders, not to chase the market too much, because we've seen such a move before. We've seen how this basically ends each and every single significant rally like this we've seen in commodities or in dollars and currencies. They need to be careful not to chase the market because it might not have that much room to go, especially if the regional war does not expand from one side, or at the same time we have a lot of when it comes to technical indicators are all heavily overbought.
Definitely one of the big winners and the one that took advantage of this hike is S&P with a new high above 5,700. Nasdaq definitely jumped up and opened on a gap, but didn't create a new high, and Dow Jones as well. Dow Jones is now above 42,000, and okay, fine. We were expecting that. We were discussing that stock market's going to continue with the rally, but be careful being at the top or being that high.
Because if you look also at the history of each and every single time the Federal Reserve started cutting rates, markets basically started to go up a little bit, and then we had a major retracement. So be careful on that one.
So exactly. So until the end of the year, we're going to see a lot of volatility. We need to be careful. We have a lot of news. We have the election at the same time. Now, to go back just into a little bit more details into euro dollar, dollar yen, and the rest of the currency. So euro dollar is still heading towards 112, as discussed last week and the week before that. The attempt to touch 112 previously failed, and now we're going towards that level for the reasons that you already explained. For the dollar yen, we can see that, okay, the major trend is still down. We cannot say not, we cannot deny that fact. We're still trading below the moving average around 145.80 or 146. We're still trading below that. So does it mean we're going to have, we can still have a retracement up to that certain level, especially that Bank of Japan, with the latest news coming from Bank of Japan or from Japan itself, we know that there wouldn't be a rush to interfere in the market for this year at least. So the levels are correct. What are the next support and resistance in your opinion, and what can be done from this level?
I mean, to start with the euro, basically, we tried to retest the 1.12. However, we failed to do that, and this is again because the dollar index is still holding that 100 spot 60. But on the other hand, the estimates going forward, the ECB is not basically expected to cut rates again until possibly until December. On the other hand, you have the Federal Reserve might need to cut another 75 basis points from now until December. So this is still a factor positive for the euro more than it's factor positive for the dollar. That is from one side. Today we had, like earlier this morning, we had the French at least services and manufacturing PMI. They came in with some sort of a little bit of disappointing data, at least when it comes to the services. Now we're back into shrinking, and this was unexpected. So we might see another round of retracement in the euro. However, you have the 111, 110, and 109.60. This is what keeps the bullish outlook intact as long as we're trading above these levels. But there's no reason for us to change our bullish outlook, at least for the time being. Now, a break of the 112 would at least clear the way or pave the way towards one spot 12.75, I would say, and even 1.30. In Japan, the Bank of Japan did not actually do anything, and this was basically because the Bank of or the Federal Reserve basically cut 50 basis points. That's kind of a present or a gift for the bank for the Bank of Japan. However, the Bank of Japan did not close the door on any further rate hikes. They basically kept the door open, but the timing is still uncertain. If they're not going to do that from now until the end of the year, it could be at the beginning of next year. Therefore, the move that we're seeing in the dollar yen, it's not something surprising, but at the same time, it could extend, and it could extend maybe towards 145 or even 146. That is not something that traders should be like surprised to see.
Easy to correct.
Exactly, because we should not be surprised to see such move, especially that the decline from 162 towards 139.70 took about maybe 4 weeks, I think so, after 5 months of consecutive gains. So, but again, I would still say traders need to be very careful not to chase the market, not to chase the move, and not to be positioned in the wrong way, at least on the wrong. In the wrong place at the wrong time, especially when we are reaching these levels now.
Nour, what about the cable? Like, if you look at the sterling dollar chart, we noticed that that GBP USD at the moment, it's like it's going ahead of the euro dollar. We already broke the resistance. So if there was a 112 on the sterling dollar, we would have broken that. And we can see that it's trading above 132.70 at the moment, heading towards new highs or at least retesting the levels of 136. We still have around 300 pips or 330 pips from here. It's a long way to get there. There's a lot of back and forth that can happen, but is cable leading the way this time?
Yeah. Here's one thing that people or traders need to understand about what's happening here. It is all about what the central banks are doing currently. Now, if you look at what the ECB did, they did cut more than what the Bank of England did. over the past few meetings. So that's one factor that is basically on the positive side of the British pound. I think going forward, there's a lot of talks about the budget from the UK, which the government or the new Labour government is basically announcing every day or promoting that this budget will be painful, and people needs to basically try to adjust for this coming pain, which we don't know what it means yet. At least, so I think the British pound, also looking back in history, the British pound basically was also in pain under the Labour government. So I think moving towards 136, 137, that is not something surprising. But I think if you are looking into what the new government is actually promoting every day, that keeps me a little bit away from buying the British pound, at least for the time being. And the rally that we're seeing now is basically based on the dollar weakness, not necessarily because the British pound is actually strong.
All right. So, guys, to sum it up, be careful. We have a lot of news this week. Powell is going to speak on Thursday. We have the core PCE on Friday. Manufacturing PMI today. For the dollar, we have a lot of news, so be careful while having the news. Make sure that you have the proper exposure. For the ones that were trading US oil or crude oil last week, we tell them congratulations. Oil is around the 72 on US oil, and I think we still have around $2 before hitting the resistance from where we are at the moment. We will definitely see you next week. Thank you for attending. If you have any questions, please don't hesitate to contact us.
Have a good weekend.
Thank you.